Hey everyone, welcome to the Rotation Report Liberation Day special. Oh, what a special day it is. I'm Aaron Jackson. You can find me across the internet at the Rotation Report. I'm joined today by my special guest, Ryan Knabusch. He's the financial advisor here in Northern Michigan. What's going on, Ryan? How are you holding up today?
Oh, just trying to stay nailed down. I think with how windy it is today, it's pretty appropriate for, the tariff announcements
Yeah,
here.
some pretty hellacious weather out there, some pretty hellacious stock market action. 2,200 U.S. stocks down 5% today. I can't keep up with all this shit. We can try all we want. We can try. Uh, but if you guys have anything you want to talk about, throw some tickers in the chat. We'll talk about them because, like I say, man, teamwork makes the dream work. This is just way too much shit flying right now. And yeah, we were planning to present all the bullish market evidence, but there is none. No, just kidding. Just kidding. But yeah, let's dive into this a little bit here. Oh, diving into the presentation. Okay, yes. Yeah.
All
So my
right.
boy Ryan, he loves the fundamental analysis. He's my filings guy, right? I keep him
Mm-hmm.
in a dark basement office because that's where we want our fundamental analysts these days, right? We gotta keep them in there just so they're on top of anything. Can't let them out,
Mm-hmm.
right?
Mm-hmm.
Okay. So the big thing everyone wants to talk about, we want to know about S&P 500. What the hell is going on here? We've been talking about it a lot lately. There's just this big, massive momentum divergence that's built up in the indice for basically a year, and now it's unwinding. And look, the tariffs are not going how people want. You can blame it on this, you can blame it on that. Either way, it's just an unwind that was basically happening in the longer term, no matter what happens. What do you think?
Yeah, it does seem like this is a little overdue. This kind of reminds me of, especially today with the tariff announcements. It's almost like going through COVID again, where and not just because the market's down today, but because you're going to find tariffs in every earnings call over the next quarter, 2 quarters, 3 quarters, probably 2 years. Well, just like COVID, we had random companies saying, "Oh, our sales are down because of COVID." I think we're going to get a lot of that, but it's a nice excuse for the market was just overbought to begin with.
Yeah, I mean, like we've talked about it before, just these massive moves in stocks that were not even tied to earnings. It seemed to be just flows related or who
Yep.
knows what, some sort of
Mm-hmm.
schemes
Mm-hmm.
or whatever is going on in the market. And yeah, a lot of stocks they have no valuation support, and that's a bit of a problem these days. Interestingly, we move into the Nasdaq 100 ETF QQQ. Yeah, earlier this morning, we notice. It's closing in on a recent support area around 450 or so. It's actually off the lows here. Found some buyers above that. Didn't get the full test, but does that really matter so much? I guess we'll find out.
Yeah,
Yeah,
yeah.
so
Most of the pain's already there.
yeah, at least in the short run. I mean, look, these markets move so volatilely. You would expect some big swings. And, that brings me to a couple of rules I like to use here in any volatile market trading environment, crashes, what have you. I've got a VIX rule of 40. Basically, when the VIX spikes to 40 or above, you're trying to find something to buy. You just got to try to find something to buy. And then on the flip side, if VIX spikes 40% in a day, also, again, you got to try to find something to buy. Uh, so we're pretty much in that territory today. I know VIX actually hasn't made a new high with the index lows, which is kind of interesting. I'm sure many people are pretty positive about that, and it's a solid thing to be positive about. But let's move on to the small craps. Oh boy, well, let's see. We've got small craps down 5.5% today, and there's definitely some a lot of price action, a lot of volume in this mid 190s, upper 190s area, and it seems like we're below it right now. Man, what do you tell people about the small craps these days? Because do we think that eventually these tariffs are going to help the small caps outperform, or is it more like a risk off and you just avoid them?
Yeah, right now it just seems like risk off is the way to go. I mean, the small caps tend to just be tied to overall economic activity, and it's not too positive right now. Tariffs included or not, there's just a slowdown in activity to begin with, and tariffs depends on who you ask. I suppose tariffs are supposed to help small businesses, but in the end, it sure doesn't seem like it.
Well, maybe we've got this presentation lined up perfectly, and maybe the tariffs help. Oh, no, no. I was going to say small business in Mexico because Mexico's got an
Nope.
interesting breakout today. We'll get to that
Mm-hmm.
in a second. Yeah, the rates. They say that the Trump administration is trying to act like a bunch of psychopaths just to get the rates lower. And you know what? It's starting to work a little bit here in the 10-year U.S. Treasury yield.
Yeah, it looks that way, and I guess it's an unofficial sort of mandate for the administration was to get the long-term interest rate down. Hey, let's term out some of that short treasury debt, try and lower our rates long term, maybe help our balance our budget on top of the tariffs, and then hey, we can just lift the tariffs and we're all good. Uh, Sounds so easy, doesn't
Sounds so easy, not a fun process, no
it?
doubt about that. I will say, the one thing that really stands out when you dig into the people who are buying U.S. Treasuries, it's like Cayman hedge funds, which,
Mm-hmm.
you
Mm-hmm.
know, you want. I like to make jokes about crypto and be like, oh, well, they're just a bunch of Cayman hedge fund schemes. Well, you know, also U.S. government debt, if you want to look at it through that lens. So
Yeah. Yeah.
that's not great, not great. And then,
No,
oh
definitely not.
boy, the big elephant in the room now is wait a minute. All of a sudden, the U.S. dollar is starting to fall out of bed here. Are you hearing anything about that from people?
Not too much. No, no, it's not been a big topic from my clients or anything. I've certainly heard a lot about it from professional sort of conversations, but it's not too important when it comes to a client level conversation. But I mean, shoot, it's this. You can see back in 21, 22, it had a nice run up there. I think we're kind of stuck here. You can find a lot of people on both sides of the argument with the dollar.
Yeah, well, it's good that people aren't really concerned about the purchasing power of the dollar yet, because that could be a real. I mean, you
Mm-hmm.
want to talk
Mm-hmm.
about another leg of crisis, just a rolling leg of people losing their minds, or just going insane crises. I mean, you get this dollar index below the 100 level, boy. That's been a huge level for a decade now. It's just been my easy.
Mm-hmm.
I haven't had
Mm-hmm.
to look at the dollar chart forever. Is it above 100? It's fine. Is it below 100? Yeah, that's a problem. But this is getting to be a huge, just an entire give back here. Like
Yeah.
that's a big give back. Like you don't. I mean, it might just be preceding a breakdown here because like that is not healthy.
Yeah, I agree. I agree. It doesn't look good. And there's a lot of there's plenty of people on the side that the dollar has to come down. I think that was part of the Trump administration's goal too, was to bring the dollar down. Well, so far, so far we're seeing it.
Yeah, so far so good. Like, all right, and then yes, the tariffs. Man, oh boy, did Trump put on a show or what? What a showman!
Mm-hmm.
This
Mm-hmm.
guy. And after the performance, he was like, that was a great freaking cutout you had here with the tariff rates. It looks so good, whatever, whatever. Anyways, Mexico and Canada seem to be exempt. And today, you want the big takeaway from the tariffs. It seems to be the market saying, yeah, no, we're doing a North American political bloc, even though like Canada might not feel so great about it right now. You make a deal with Trump. He's going to bring you into the block on this side of the world, and then we're going to have near shoring, and we're just going to do all of our production on this part of the world. That seems to be the message of the market. Today, Mexico, it broke I don't know, base from November, base since the election through the 200-day today, and you can see longer term, it is holding the longer term trend break. And while it's not the cleanest chart with a bunch of supply from 23, 24 on the left, it seems to be trading pretty well today.
Yeah, yeah, absolutely. I think the market wasn't expecting that so much, given the rhetoric the last month and a half. Um, you know, Canada seems to have dug its heels in, but I think Trump relented a little bit, and we're seeing a good reaction. Time to buy. Time to bring everything back to North America.
I think this Mexico performance is really important moving forward because They did. They seem to have made a quick deal with Trump,
Hmm.
whereas
Hmm.
Canada is trying to, go tit for tat. And we currently have like a 6% spread between Mexico performance and Canada performance today.
Hmm.
And come on in, Canada. I know we said things about the 51st state. We love you. We're basically the same, you and us, right? We're good. We're good. Everything's going to be fine. We're going to do a giant block to compete with Russia and China. It's going to be great. It's going to be
Hmm.
great. You just got to be willing to cut a deal. And like I said, Mexico having a great day. Other countries see this, so be more likely to be like, oh, well, perhaps
Yeah.
we can just cut a deal.
Yeah. Yeah. Maybe it won't be so bad if we just, meet in the middle or closer to where, Trump wants it.
For sure. And then, oh boy, this week, the IPOs, the last few days, it's been a hell of an interesting sentiment story because you have the CoreWeave IPO come out Friday and they can't find anybody to buy this thing, right? And then, Jensen has to step in with his anchor bid around 40. And then, you catch a few buyers ahead of, on Monday. And then they open up the high roller table at the casino. The options market opens on day 3. And that thing just, I mean, what, 50% in a day?
Hmm. Hmm.
What a move. Like, is this just telling us exactly where sentiment is? Here's my proposal. Institutional sentiment, bearish for all the right reasons.
Hmm.
Option gambling sentiment, bullish because you can get away with shit like this.
Right.
Am I onto
Right.
something?
No, I think you're spot on. I think there was a tweet this morning from someone from Bloomberg about every economist having a negative reaction to the tariffs. So institutional side, pretty par for the course, and consistent with the world is ending mentality. And as you can see in the markets here, but that's all right. CoreWeave is great. Let's
Yeah.
go buy CoreWeave.
Yeah, screw it. And it's like it's
Let's get
tail.
our giant wafer chips too coming up here.
Oh baby. Oh baby. Yes. I don't know if you guys are familiar with Cerebras. They make GPUs that compete with NVIDIA. And they were trying to IPO last year, but they have tie-ups with I think it's the UAE,
Hmm.
and they couldn't get CFIUS clearance from the Biden administration because obviously they just got CFIUS clearance from the Trump administration. They're in the IPO pipeline now. I don't know when, but my God, if you don't know about Cerebras, do yourself a favor. Go look up these chips. They got chips the size, I swear to God, they're the biggest chips in the world, the size of a dinner
Hmm.
plate.
Hmm.
Okay. This is going to be the most memeable IPO you have ever seen in your life. So if we can just hang in there with the tech stocks and get one more leg in the AI rally, you're going to want to know about this Cerebras, no doubt. And then one other one I wanted to talk about, Newsmax. What the hell?
Yeah, well, that's contrarian today. That's up. That's up quite a bit today here. Um, you know, I
Unbelievable.
I don't use the site personally. A lot of people do apparently though. It's rumored to be the next mega trade. After Donald Trump's stock
Oh
has
my
gone on
God. So
its
you mean
roller coaster
it's
ride.
just
This is the
gonna
new one.
crash from here, basically. We've already seen the best day, huh?
I don't know. I don't know. Today it's up 10%, and who knows? Who knows? It's
Oh boy. Maybe
it may
remind me
you know it
later.
yeah,
Remind me
it could give it
later,
all back
Rumble.
tomorrow, and then suddenly Monday we're up 20%. That's a nice roller coaster ride for sure.
Yeah, remind me later this Rumble chart. It seems to be holding up, which isn't that a
Oh yeah.
MAGA?
Mm-hmm. Mm-hmm.
Yeah.
Yes. Yes, it is.
All right. Next, oh man, you brought this to my attention. So bring people up to speed on this. Is Google the next Kodak thing?
Yeah, this is a nice piece of clickbait that Market Watch put out. Oh, I think it was earlier this week. Uh, Google's slowing down with the search. At least that's what the article says. And like any bit of good clickbait, let's compare it to a company that fell behind the times and just didn't innovate enough. And Kodak's business model was we're just going to do one thing and we're going to do it as well as possible until the world just moved on from them and said we don't need that anymore. Uh, Google's not the same thing. You know,
No.
you How many people use Gmail? Search aside, obviously search is a big component of their revenue, but you have Gmail. They make chips. They still have Pixel phones. They still, they do all sorts of things. Obviously, their AI isn't quite up to the same level as ChatGPT or anything, but there's too much working in the positive direction. They're not holding themselves in a corner, but it's some fun clickbait to talk about.
That's right. And I'm becoming more and more of a fan of this idea that the cheap content is the fadeable content. I make a cheap joke on here about CoreWeave the other day, last week. You buy the dip in CoreWeave, then you get the IPO. You just fade the cheap content wherever you find it, wherever you
Yeah.
find it, because the cheap content's easy content. It's within like the realm of what's acceptable, right? And if people like it, that's kind of like a red flag, to flip it. Sure, you get your clicks, you get your engagement, whatever, but the one thing I'd say about Google is probably, yeah, the ad business, the search business seems to be in trouble. Yeah. And like you said, Gmail, YouTube, you needed Chrome to even log on to this stream, for the love of God.
Yeah, yeah.
And they've got the AI. They've been sitting on the AI. They shelved the AI because they're like, why would we disrupt ourselves right now? Let's not disrupt ourselves until we absolutely have to, because we've got such a freaking monopoly here, such a well-moded product, right?
Yeah, absolutely. Why cannibalize it when you don't have to?
Yeah. And then if you look at the chart, I mean, Google just even today, still holding up above those 2021 highs here. Not too bad. You'll love to see it, really. And you look, oh boy, Meta kind of losing a big pivot here today. Amazon, we'll see how that closes. But yeah, back below that 2021 high that was being used as a nice reference point. Google turning into best in class kind of quickly.
Yeah,
Ooh.
absolutely.
And now the quarter one wrap up. Boy, basically, defense led in Q1, obviously. And that leads to the question, what's going to lead in Q2? Any thoughts?
Oh, I think I wouldn't be surprised if energy continued this trend. I think we're in a commodity run right now. At least it seems that way. And so if we fast forward 3 months and we find that energy led again, I would not be in the least bit surprised.
Yeah, just yesterday, the natural gas index, which includes pipelines and producers and all that, 52-week highs. Today, negative 3.5%. But honestly, I think energy can go either way here. I think they've been building out production capacity across the world a lot in these last few years, and we've got a lot right now.
Yeah.
And I want to be bullish energy, especially the European energy. Uh, I just don't know. You can make a really good case that these charts just completely roll over, and you want to talk about like this kind of Cold War taking a shape. Well, that's a type of shape that it could take. Like XLE looks pretty vulnerable. OIH is closing in on 2-year lows here, 2-year lows
hmm
today. I mean,
hmm
it's getting really close. So trying to be optimistic, but maybe not. The
Hard to
one,
hard to be.
yeah, the one I was thinking of was utilities. If anything's going to help us out here, give us a little safety trade. It's these electric utilities, right? Because we are trying to the goal is to nearshore, reshore, right? Bring all that production capacity to North America, Mexico. Uh, we'll see. We'll see if the electric utilities can be a safety trade. What do you think?
Yeah, I think part of it depends on if the boomers want to keep their equity exposure. But that's pretty much buy the Utes to get some yield, but they don't yield so much anymore. It's been a big run up, as you could see on that chart, but they don't provide the yield anymore, and it's always been a good proxy for bond exposure. And with bonds yielding north of 3-4%, why not take the safety of a bond instead of the utility? Yeah, utilities aren't cheap anymore. They spent a lot of time being very cheap, and they're not so much anymore.
It's true.
Um,
Their capex
so it,
plans are huge, huge
hmm
capex plans,
yeah,
like
absolutely.
transformational. And you're right, that is the risk. That is the risk. I mean, I think as long as it doesn't make a new low for, uh, the year, it's all right. It holds up above the 200-day maybe, but no, there definitely is the risk that this rolls over, because I'm thinking, I'm thinking of these things more offensively, if I'm being honest.
Hmm.
And like you
Yeah,
say,
yeah.
the well, you have a 4% yield on the 10-year, and yeah,
Hmm.
2.86 in the utilities ETF. So
Yeah, yeah.
if we're really going to have a freak out about the economy and it's just going to keep going and rolling, yeah, that's certainly a risk. And then, yeah, like I stated earlier, nat gas, dipping off of 52-week highs yesterday. But again, I think the interesting thing about nat gas is, okay, let's say oil is going to roll over. I mean, isn't oil's rolling over today? That means if you lose production in the U.S., that means tighter nat gas supply, which means higher nat gas prices. Does it lead to destruction, demand destruction? Who knows? There's been sellers over four basically all year, but for now, this is one of our leading contenders in an uptrend still.
Yeah, I would support that. I mean, it's you think about where nat gas is used the most, and we may as a country get to nuclear power at some point, but that's a long way to get to where that can provide power for everyone. And nat gas is the next logical alternative.
The
So
bridge
there's a
fuel, right?
yes, yes, exactly, exactly. So there's a bit of a floor to the demand.
Yeah. And then, oh boy, earnings season coming up. Boy, oh boy. We're getting macro data points every day. Like, honestly, who even cares at this point? We know prices paid are going up, right? Because, oh my God, the tariffs. It's going to be a disaster for a while. And then now, earnings season coming up. Boy, you shared this chart with me earlier today, and we're looking to Q2. And is this right?
Hmm.
People are expecting, is that 10% earnings growth this quarter
Yeah,
expected?
that it's not so favorable. You know,
That
it's
seems like people are insane. Whoever did these projections are out of their goddamn
yeah,
minds.
yeah. Uh-huh, uh-huh. Yeah, yeah. I would completely agree.
Are we
I don't know
pushing
about
toward?
that.
Are we pushing towards negative numbers this year? Do you think?
Oh, that I think we'll see that later in the year. As you know, you think about a lot of demand was pulled forward at the end of last year, in anticipation of the tariffs. So I think we'll see more than the potential negative growth number towards the end of the year.
Yeah, and I just see a nice 11% number out there, and it's like, boy, I don't think so. I don't
Yeah,
think
it
so.
seems
We're
like
gonna
a
have
hard
to.
fade.
Yeah, yeah, and like always, look, market's getting a little sketchy.
Hmm.
The earnings are great. End of the day, fall back on the technicals. Trust the technicals. Trust the reaction to news, not the news itself. Who cares about the news? Trust the
Hmm.
reaction.
Yes, yes, agreed.
And yeah, like you say, like these next few quarters, they're just going to kitchen and sink it. Any problems, any charges that don't even have anything to do with tariffs or anything, you're just be like, well, we've got this tariff charge, right? Like they're
Yeah,
just going to be,
absolutely.
it's a free for all for getting all your shit out in the open.
Now's the time to do it.
That's right. And then, oh boy, we have uranium. I know we wanted to talk about the uranium because, yeah, even today, still holding the low end of this range. This is another, well, kind of. Keep an eye on it. That's one to watch here with the
Hmm.
CCJ and all that. That's another one where it's like a geopolitical thing. You're dealing with Russia, who basically, leading up to these last few years, Russia, China, Kazakhstan, that kind of block, they kind of just flooded the market with supply, right? Like they do in so many industries. And we kind of have to build it back. We kind of have to get along with Canada to be building it back. Definitely want to keep an eye on it here. Any thoughts? Is it time to take a look at maybe a Cameco?
Yeah, I think so. I mean, we're there's locally here in Michigan, we have the Palisades plant coming back online uh, sometime in the next 5 years, I believe. And there's rumors that Germany is going to reopen their nuclear plants. The demand's going to be there. China surprisingly has a lot of nuclear plants. That doesn't get reported a whole lot, but there's going to be a lot of demand for uranium. And we
Mm,
haven't touched on the small reactors either, which I don't think is any short term trade at all. But there's no shortage of demand for uranium right now. This seems like a good entry point.
yeah, it's just a matter of how much is this market going to keep selling off? How much can it withstand that? You're looking for stuff to buy. you want to see, we can probably afford at this point, we can see like weeks, months of relative strength before we even have to worry about pulling the trigger. But it's definitely, you get a broad market pullback. Certainly something you want to keep an eye on. And you were mentioning the small reactors. Yeah, SMR, man, tried to like that one. It's kind of hanging a bull channel above prior highs here. Kind of struggling. Time will tell, but anything speculative right now has just so many headwinds at this
Yeah.
point in time.
Yeah.
And then, yeah, we wanted to talk home builders. Oh, that interesting area in home builders. I don't know. Are we going to get the lower rates? Can we save the chart here, get it back above 97, or do we have a big housing problem here? We might.
Yeah, yeah, there's certainly pockets of weakness. Certainly more so in the south, and I think it was the mountain, the Rocky Mountain area too. Those were kind of the areas of weakness for housing, and so um, I don't think the demand's going to go away. But one data point I saw yesterday was that the boomers have overcome millennials as the highest percentage of home buyers right now.
Seems
So
bad.
we're looking at second or third homes for some of the boomers, and where's the demand going to come from?
Yeah, you
So,
said it. You said it. Yeah, KB Homes most recent earnings, they have pretty broad exposure across the country. They're like, yep, Florida's our worst market, which, okay.
hmm.
Texas was not so great because, everyone fled. And then they mentioned, the West was actually the best. Those blue states that everyone fled, or the cities that everyone fled, those are actually hanging in there better. Maybe also LA. I'm not sure about that. But interesting dynamic. And I just keep wanting to see a resolution here. And it's just, even today, home builders, $2 off the lows now, trying to come back, trying to reverse it. And I mean, rates do look like a top. So I mean, that should be supportive, but so far so bad.
Yeah, you would think so, but we have how many government employees just lost their job? They're not buying houses right now. Um, Gen Z is not buying so many houses. Most people don't want to hire them. I heard this,
True that.
heard another data point this morning about CEO joking that he would rather hire an AI agent than to hire a Gen Z employee at this point.
Oh my
Um,
God, the slander.
yeah, yeah, yeah. It's not looking too good out there.
All right, so I think that's all we have in terms of slides, but let's take a look at what's getting wrecked today. Anything standing out green? Are we noticing any strength anywhere? What do you think, Ryan?
Surprisingly, biotech is hanging in there pretty well.
Yeah, biotech. That's because they already had their sell the news event, right?
Yeah, yeah. Uh-huh, uh-huh.
RFK firing those guys, the vaccine regulators. Yeah, look at that. Oh man, it's definitely relatively strong today, but I don't know what to make of this type of price action.
Yeah.
There's the 3-day rule. When you buy, you want to wait 3 days after a market kind of a newsy sell-off, right? To let the emotional selling just wring itself out, just wear itself out, and all the emotional sellers to be gone. Yesterday was day 3, hence the bounce. But then, man, they're even buried again today. So looking kind of rough. Looking kind of
Mm-hmm, mm-hmm.
rough. And all right, leading the industries today, leading the groups, we've got healthcare providers, staples, wind energy. What? Any thoughts? Wind energy? What? What?
Yeah. I don't know. I mean, if I walk outside, I could put a turbine out there and power my house for the next week, I think. But
Yeah, no
um,
kidding.
you know.
No kidding. Gold. Whoa, gold miners green. I know gold had a huge sell-off this morning, but they just came right back for it, huh? Yeah.
Mm-hmm, mm-hmm.
Look at that. Oh boy. Okay. Let's pop up these gold miners because yeah, that, that's a hell of a that's a hell of a rip. I think people are just, it's kind of, it reminds me of the China tech stocks not too long ago when people were just addicted to the space, right? You get addicted to the
Yeah.
group and you're like, the spirits are like, I gotta buy the dip, buy the dip, buy the dip. That's not looking as healthy.
Yeah, yeah. I think the miners were overdue to catch up. That they were pretty weak for quite a while.
Yeah,
So they were just overdue.
for sure. Um, and then, you look at gold, I think 3,320 is a huge target area. Now, I've seen some charting, some extensions that kind of suggest this 3150 is like a topping area. And it could be like a target area, but 3320 is the huge number I'm watching personally. Let's look. Oh boy, the worst group of the day. What do you think the worst group of the day is?
Oh, I would say that's discretionary. It's got to be discretionary.
Got to be oil services, oil
Wow,
producers, the
wow.
worst on the back of that
The
OPEC announcement.
tariffs. Mm-hmm.
Yeah, the
Oh, the
OPEC.
OPEC. Yeah, yeah.
Yeah,
Mm-hmm,
they
mm-hmm.
said they're going to boost production, which you never know. But the one I wanted to point out here that's right down, oh boy, right in the worst groups of the day, socks. Socks. They had a breakdown earlier this week. You catch a little bit of a bid. Look at that huge rejection and breakdown here. Boy,
Mm-hmm.
that is trouble. That is trouble. You think all the socks buyers were worn out, but or were already gone, but not the case.
Nope, nope, not at all.
One thing that surprises me is they even said uh, after the tariff announcement, they're like, no, no, no tariffs on chips from Taiwan. Don't worry about the GPU.
Mm-hmm,
Didn't matter.
mm-hmm.
Did not
Yep,
matter.
damage is already done.
Yeah, and I'll tell you one thing that's really concerning today: the banks. Oh, the banks. Maybe we're just overblowing it. Maybe we're making too much out of this level. Hey, look at that. Oh, MACD, positive MACD bounce spot. So maybe, but bigger picture, we've got this thing just lost the 2008 pre-great financial crisis highs today.
Mm-hmm.
Don't like seeing that. BlackRock. What do we have with the BlackRock? Oh yeah, fake break of the 2021 high. Same thing in Blackstone. All these structured kind of, it's interesting. Are other countries going to be like, hey, Larry Fink, get out? Just get out,
Yeah,
because that was
yeah.
the whole
Mm-hmm.
growth plan. Like they're going to grow in Middle East and more in Europe. Are they just going to
Mm-hmm.
tell Larry to get out?
It depends on the alternative, I guess. What else is there? That's if you know you want to keep BlackRock in the door, but or kick them out. What are you going to replace them with?
True that. True that. And then, oh boy, let's see. You're going to replace them with European financials, I suppose. Rolling over could be acting worse.
Yeah, you want to talk about something that's gotten hit? That's there's the firm I used to work for, pretty big on structured notes, and anything tied to a European bank index was a no go, just a no go. Like
Really.
there's still that same sentiment about Europe, not just recently, but it's been an ongoing thing.
Yeah, that's interesting because I bet some people are changing their minds now, huh?
Mm-hmm.
And then,
Absolutely.
retail having a tough day. I guess everyone's buying stuff from wherever in Asia that just got tariffed. Because look at Under Armour,
Mm-hmm.
massive
Mm-hmm.
multi-year breakdown, breakaway gap. Man,
Yeah, what's left of that company? I used to play in that a little bit, but yeah, I've been out of it for quite a long time, and it just man, there's been no reason to get back in,
no.
no reason at all.
Last summer you had that nice base at support. I bought some there, but it just gave it all back, and you just can't.
Mm-hmm.
I mean, this is just straight up falling knife. Who knows if they're going to make it territory? It's tough. You better have a hell of an edge to jump into this falling knife, right?
Yeah, absolutely. That's not one I want to catch.
Okay, what else do we have? Oh man, the Micron 78. Wow, 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 wow. And they say post DeepSeek that you can't get enough of these memory chips. Well,
Yeah, yeah.
that's what
I
happens.
don't
And
know.
the
That's
other. Go ahead.
and yeah, that's at some point that it's gone too far with something like Micron. Demand for Under Armour is one thing. Micron's a whole different story.
Yeah, and I'll tell you
And
the big thing. I don't know if this is getting enough play in the news and the media, but Lutnick's out here floating the idea that they're going to scrap CHIPS Act awards.
mm-hmm.
And if you want to make capital flee the country and then never come back until you're gone out of office, this is how you do it. This is how you do it.
Yeah,
You're trying to
yep.
take money that's already been allocated, promised, right? This is in the
Mm-hmm.
capital expenditure plans of the companies, right? And you're just
Right.
you,
Yep.
years now, years, and you're saying you're going to try and claw back that money. I mean, that's not trying to find buyers for our bonds and making interest rates lower. That's That's trying to destroy the country. Shit, right there.
Yeah,
Real,
yeah,
real talk.
that's the yeah, absolutely. Yeah, you want to shut down economic activity. That's the way to do it. Say we're
I,
not going to fund you anymore.
I imagine that they're not gonna. That's not gonna stick in the courts. I imagine you'd hope so. But the way Micron
Yeah.
trades, I don't know. Like, look at that
Mm-hmm.
range breakdown just today. I mean, brutal, brutal stuff. Boy. Um, any names you're watching?
Well, one that we've talked about before is um, Fluence has had a nice. Well, I don't know if it's nice, but it's been hit pretty hard today with the tariffs. But
Oh
at some
boy.
point that's going to be a buy again.
Oh boy.
Uh,
Maybe for some, yeah. Maybe for some private equity. So I don't know.
yeah,
Like,
yeah,
holy shit.
yeah.
Holy shit. That thing. Yeah. Not going to make it. Not going to make it, it
Yeah.
appears. You need to see that reverse right now. Right
Mm-hmm. Mm-hmm.
now. Oh, let's see. The energy producers, we like the utilities. The materials, kind of interesting. Let's look at Eagle cement,
All right.
right? We're building. You want to
Mm-hmm.
build in North America, they're coming for the materials like the cement. Costs are not going down. There's your stagflation right there. You want to build? Fantastic. You're paying for it
Mm-hmm.
in the cement. Look at that. Holding
Yeah.
support, not even flinching today, really.
Nope.
So,
No, maybe that's your defensive trade. No.
I mean, kind of, it's right in that angle, that geopolitical
Yeah.
angle. That's right where it's at.
Mm-hmm. Yeah.
No doubt about it. Oh man, and these banks. Let's check in on the banks. Goldman, are broker dealers? Are they broken now? Well, yeah, not too bad. Could be worse.
Yeah.
Could be worse.
Yeah.
Hanging in there.
There's the. I mean, shoot, days like this, they're earning their spreads.
That's
Those
not
broker
that's
dealers.
not bad at all, really.
Yeah. Mm-hmm. Mm-hmm.
That's there's some positivity for us. Okay, we like it. We like it.
Yeah.
Broker dealers, same thing. Kind of still holding that low, even though it's kind of a mess over there on the side.
Mm-hmm.
Supply, plenty of supply. JP Morgan, boy, there's one to keep the eye on, right? Big
Yeah.
old head and
Absolutely.
shoulders look to it, but not broken down yet.
No, and then when that does, that's when you have to be a little worried.
Right, because
Yeah.
we were talking about the other day where like these banks, their balance sheets are a lot more conservative than you might fear, right? Just
Yeah.
based on
Yeah.
all the
Absolutely.
regulation.
Yeah. So coming out of the financial crisis, we had a lot of the sort of shady lending that banks did that moved off of banks' balance sheets completely. They had to sort of divest of all of that, and you have a lot of middle market lenders now that picked up that slack. So the loan portfolio of banks is certainly a lot stronger than it was 15 years ago, 20 years ago.
Yeah, for sure, for sure. And then look at man, these moves happen so fast. Look at Apple. Damn near sold off to the top of this old range. Man, they're getting hit on what? Was it just tariffs?
Yeah, tariff news.
Yeah, if you're looking for a bounce spot, that mid upper 190s area, looking pretty good, right? 198, 199, something like that. You know, something like should be able to hold, should. And holy shit, shout out Netflix. Netflix green on the day, huh? How about it?
Wow, wow, that's amazing.
Is that just because it has no exposure to
Yeah, yeah, that's
nice,
zero
nice?
exposure to needing anything from not anything not domestic. That everything's gonna happen here.
Yeah. Yeah, that's interesting stuff. Like I say, I think somebody's got to sell. Somebody's got a bunch of these shares, and they're just hitting eject every time you get up
Hmm.
near 1,000. That's what it appears. Big old round number sell point right there. So green today, sure, but bigger picture. What are we even talking about here?
Yeah, I don't know. I don't have a good answer for that. I've never been in on Netflix. There's just the enormous subscriber numbers every single quarter after quarter just seemed like I don't know, a little worrisome at some point. Like how many people are there to subscribe to Netflix in reality?
True that.
But
And then
apparently
here's a
there's
big
enough.
one: cybersecurity. What do you think about the industry?
I mean, if you believe in this global reverse of globalization, then this has got to be a place to go. There's already plenty of attacks as is.
Hmm.
Um, pretty likely to increase if we're going to take a protectionist sort of viewpoint on everything.
Yeah, and that's true. China is promising some sort of retaliation for the tariffs if they're
Hmm.
not repealed eventually or quickly.
Yeah.
And then the TikTok sale is supposed to be what, this by this weekend?
Yeah.
I
I
mean,
guess. Yeah.
there's a risk
That'll
that
be
no
interesting
one's
to
thinking
watch.
about.
Hmm.
But yeah, this is the epitome of what is going on with the markets. Like, I think the fundamentals probably are right up there with any group, right? For best fundamentals, like you were just saying.
Hmm. Yeah,
And
absolutely.
yet we have this big old top end look that if you really want to zoom this chart out, like it's had a hell of a run, right? For
Yeah,
years
it
now.
has. Yeah.
Massive,
Yeah.
massive run. But you also have the 200-day there, which you would think it could catch a bid there, align
You would
with the
think so. It looks
fundamentals.
like it did the last couple of times. Why not
Yeah,
continue that trend?
good point, good point. But that's definitely one of the big ones to watch this week, no doubt about it. All right, let's see what else is getting smoked. Silver, dude. Silver just could never crack 35.
Hmm.
So many people like myself have been talking about silver and the short squeeze and all that. It just rolled right over today, down 7%. Man, brutal stuff. Gasoline, gasoline futures. Oh boy,
Yeah,
that looks
not a
like a
whole lot of movement one way or the other there.
that kind of looks like a giant wedge that is makes one new low and it might just completely roll over. Uh,
Hmm.
the weak part of the energy index has been the refiners, no doubt about it. No doubt about it. XLE's weakest group, subgroup. Look at this. Refiners, big high in 2018. Early last year, big breakout, absolute failure. Definitely some support around the recent lows, but it could be a big old bearish consolidation here. Any thoughts on them? Have you been tracking I know a lot of them have spent money on the biofuel kind
Hmm.
of space. Any thoughts?
Yeah, I don't have any particular refiner on my radar. It's sort of been an area I've avoided for a little while here. It's
Yeah,
you know, a little too niche for some of my clients, and they'll take broad oil exposure or just exposure from the majors like Exxon or Chevron as instead of just taking on the smaller ones.
yeah, absolutely. And okay, what else? We have green today. Okay, some defense stocks. European defense, BAE Systems plus 4%. What up?
Hmm.
Makes a lot of sense. They're going to a lot more friends today, right, than yesterday. Yeah.
Yes, yes, absolutely.
And like you mentioned earlier, biotech, some of these biotechs coming back. Ooh, I got a good one. I got a good one for the people
All
here.
right.
Twist Biosciences. One thing that really stands out about these guys is they make genes, uh, type of I don't know if it's proteins as well, but recently kind of forming a nice little box range here. It's an expensive stock, so it might be hurt, but a lot of their competitors outsource uh, their genes and stuff like that from China, and
Hmm.
they could be a big beneficiary here. You're going to want to see the stock above 46. That's the 200-week moving average. But if things break right, this might be one of the growth stocks still standing at the end of the day.
It looks set up to hit that, like you said, with the favorable position relative to the other, genetic companies. It's having most of the production here, or just any part of the process domestically is going to help these kinds of companies. So I think you're right.
All right. So here begs the question. Client comes to you, where do I allocate money today? Europe, Asia, or the US? Which is it?
Oh, I only have to pick one.
Well, okay, let's do a region.
Yeah,
North
yeah.
America. Let's just make it North America.
Mm-hmm. Mm-hmm. Well, yeah, I think I'd still pick North America over the others right now, even today. Uh, there's much more security, and part of part of allocating clients' money is not so much getting the biggest return as it is trying to avoid the why did you do that sort of conversation. And so so if you say, well, I want to put 20% in um, Latin America. Well, great. Latin America seems to be set up pretty well, but if it doesn't, things don't work out. The question comes up: why did you do
Yeah.
that? Why didn't you just put it all here?
Well,
Uh,
that's a great point, you know.
but yeah, as far as what place looks the most attractive, I think we're much more equal in United States versus Latin America versus China versus just I don't know if Europe quite fits that bill anymore or not, but we're certainly on more equal footing than we were 6 months ago
Yeah,
or a year ago.
no doubt about it. And man, let's see. Anything to wrap it up here for the day? Oh man, so many stocks down 10%. Hard to keep track of all of them. CoreWeave down 16%.
Mm-hmm.
Um, boy, just so many. Coles looks like they're going out of business. Negative 24%. Man, just absolute carnage everywhere. Let's see anything ripping. United Health, Molina Healthcare, that type of group. Dollar General, okay, Kroger, yeah, your staples,
Mm-hmm.
your classic defense stocks, and yeah, just no matter whether it's rates falling or just the straight up fear of God in market participants, yeah, that's where the money's flowing today. So, last
Mm-hmm.
thing we're going to do here, last thing we're going to do, let's look at high beta versus low vol, or maybe let's go low vol versus the S&P 500. See what we got here. Is this trade
Yeah, look at
taking
that.
off? Well,
Mm-hmm.
man, it's a new breakout, breaking the range higher. Man, hate to see it. You hate to see it. Well,
Yeah, yeah.
any last thoughts for the people, Brian? Tell them where to find you and all that.
Yeah, so stock twits, I'm KBush9 is the best place to get a hold of me. Yeah, if you have any questions, reach out there.
Hey, awesome. Yeah, definitely give him a follow, KBush9. I know he's got a Substack. I'll link to that in the next post. I think
Mm-hmm.
we
Mm-hmm.
got to get this guy writing more. He's got the talent. He's got the talent. He just got to do it. All right. So,
Yeah, yeah.
yeah, look for that in the next rotation report. And I'd like to say thanks to everyone for stopping by today. And dude, I know you're busy today. I know you got, so extra
Yep,
thank you.
absolutely. Thanks, everyone.
Appreciate you guys. Everyone have a great day. Good luck out there, friends.